Good morning, I'm Amanda Morrall and welcome to 90 at 9, brought to you by interest.co.nz. This is your morning news briefing where you get everything you need to start your day, beginning with a pullback for the US markets, which retreated yesterday on the back of disappointing economic data that shows consumers are still predominantly in saving mode. Household spending accounts for 70% of the US economy. Nagging concerns about the eurozone and news of Spain having slid into a recession didn't help matters. 24% of the workforce there is now jobless, the highest rate of all 17 countries in the eurozone. More than 5.5 million people in Spain are without jobs. Overnight, Spain's largest unions led marches involving thousands of protesters in 55 cities. The benchmark S&P 500 fell by more than 0.5%, sinking below the 1400 mark, which had temporarily buoyed investor sentiment last week. Both the Dow and Nasdaq also closed lower yesterday. Oil and gold prices also slumped. On the upside, quarterly earnings for the U.S. corporate sector are proving much better than analysts expected. For the 276 companies that have reported since April 10th, earnings per share are up 6.7%. That's 7% above what was originally expected. Some analysts are suggesting strength in the corporate sector will boost the benchmark S&P 500 to a record this year. There's also the view that this year's 12% rally is basically as good as it's going to get. Also, later today, we'll have news on where the official cash rate is headed in Australia. Economists are predicting the Reserve Bank could lower the rate by as much as 50 basis points. It's currently at 4.25%. Economists with ANZ in New Zealand are predicting a more modest cut of around 0.25 basis points and a muted response from markets as a result. I'm Amanda Morrall, and that was 90 at 9, brought to you by interest.co.nz.